Hey everyone, welcome back to the channel. This is Education About Stuff. We're in a bit of a different venue today. We are in the living room. We also have a special guest. I don't know if you can really see her. She sort of burrows herself into the blanket. Before I get distracted, let's get started. Let's talk about the stock market. This video is going to be more basics, more fundamentals. I want to talk about some definitions today. I want to tell you what the stock market is. What is a stock exactly? What are you getting from it? What can you expect from it once you have ownership? And then finally, I want to cap this off with who can you trust? There's a lot of advice going around right now. The stock market is really hot. A lot of people are getting into it. A lot of people are getting into it for the wrong reasons. And people like financial gurus and all that you'll see online are taking advantage of that hype. I want to make sure that we're investing safely, we're getting into the stock market for good reasons, and a big part of that is knowing what you're doing. You might have heard the term share, like a share of a company, stocks in a company, or a company's equity, something like that. Those terms are largely interchangeable, so they all kind of mean the same thing. What a stock is, or what a share is it's really just a very small piece of a very large pie. So if you picture a company as the pie, when you own a stock or a share, you own a very small part of that company. So a company might choose to release, let's say 3 million shares out into the wild, into the market. That might sound like a lot, but when you have everyone investing, everyone owns, maybe 1,500, 5, 10, 20 stocks, whatever. You end up filling that pie pretty quickly. A company might choose to release more stock over time, or they'll do something called stock buyback, where they buy up their own stock. So let's say a company has 1 million outstanding shares. If someone were to buy 100,000 of those available shares, they would own 10% of the company. And that means you'll own a piece of the company that you're buying proportional to the amount of stocks that you buy. There are a lot of things that go into determining what makes a stock price what it is. So much so that I could maybe even come up with a whole series that is just talking about that. But really there are two main things that go into a stock's price. You have a company's fundamentals and you have speculation. A company's fundamentals, this is what traditionally stock price has been predicted on. No one has a crystal ball, so no one can truly predict where the stock market's going to go or where a stock is going to go. But you can make assumptions. Fundamentals really just mean the science behind the stock and the company. How are they doing profit-wise? How are they doing with their assets? Do they have anything cool on the horizon coming out that's going to be very profitable? Those are the types of things that you want to look at. Nowadays, in a stock market that's like this, where a lot of uneducated average Joes are coming in just buying up whatever they feel looks cool or what people are talking about, this is speculation. This means that it's completely unpredictable. It's all about hype. It's all about FOMO. Or it's even about manipulation. In the news recently we had GameStop, right? GameStop, a failing video games retailer, not anything great on the horizon, felt like a very confused company. They went from selling physical video games to selling video game themed toys and game codes and things like that. Their stock was very low. To give you an idea, in early January 2021, their stock was at about $17 US. By the end of January, they were at $347 US. This is for just one very small piece of the overall pie. 100% of this was speculation. Really, the only reason why their stock went up was because of Reddit, and then the media got onto it. The media spread the word. People started joining the subreddit that was hyping this up, and so it was just this vicious circle for a day or two. And then it started to go down. It's been maybe about a week since GameStop's top on the charts, and now they're already back down to $63. So that's speculation. That's when just people are manipulating a stock, when they just pump it up in price for no reason. There's a term for that actually, where you pump up the price of a stock and then you sell right away. It's called a pump and dump. The second big question for this video is, where does your money go? Let's say you buy a bunch of shares. What happens next? What happens next is that money goes into the company's pocket. So they can use that money for a variety of things. They can use that money to grow. They can use that money to build up their assets. They can use that money for payroll, however they see fit. When you are investing in a company and you're buying shares, it's actually a really good way for a smaller company, especially, to raise capital. You'll hear the term IPO, for instance. That's an initial public offering. You can sell shares as a company privately, but when you list it publicly, it goes on the big stock exchanges. Like the New York Stock Exchange is the really big one that most people know about. In Canada, it's the TSX, Toronto Stock Exchange, and there are a few others around the world. So when a smaller company does their initial public offering and then they release their stocks into the wild, people buy them up, that's a really good way for them to raise money. Especially if it's a really hyped up company, a really hot company, that initial stock price is going to go through the roof after an IPO. A company that comes to mind where this happened was Beyond Meat. So they started listing stocks, I think, on the New York Stock Exchange. Don't quote me on that. I might be mistaken there. It's probably the New York Stock Exchange. And they started, I think, maybe around $60, somewhere around there. Even just a few days after that initial public offering, they were already at like $90 US. And then it just kept going up from there. If you're a company that needs to grow very quickly and you need a lot of money to do that, you can do an IPO, you can raise a bunch of money, you can sell a bunch of shares, you'll get that cash to do whatever you need to do with. The last big point that I want to cover in this video is who can you trust? It's a tough question because there are people who might fall under certain categories who you can trust, but the category overall is kind of like a distrustful category. Let's talk first about financial advisors. The financial advisors at your bank are salespeople. They're told to push products that the bank sells, that they get a direct profit from. Things like mutual funds, things like GICs. There might be some other types of funds that they offer that I'm not aware of, that I can't think of at the moment. But the bank makes money directly from these types of things. The best financial advisors are the ones who have skin in the game. They're the ones who will get something out of your success. Sometimes that comes in the form of like a commission, but a commission that's based off of your own profits. These guys get more money in their own pockets if you get a bunch of money in your pocket. So they want you to make more money. Having said that, character is also a huge part of this. Try to have a chat with your financial advisor, just a personal chat before you give them your money. See where their core values are. See what makes them tick. See what kind of like what their interests are. It's really easy for a financial advisor to pocket your savings or to pocket a big chunk of your profits without you knowing. Be upfront with how much money you're giving your financial advisor. Make sure that they're a good person and make sure that they have some kind of skin in the game. Even if your financial advisor is just on like a core, like a base salary with some kind of financial advisory firm, they could be a good person and have your interest at heart. It's just easier to pay someone a commission based on your own profits because you know that they're going to try to get you the most money possible. The second one, friends and parents. Like, I don't know, I feel like there's a bit of common sense here. I talked about this in the last video number 1. If there's hype and FOMO going on at your dinner table, your uncle who's never previously in the stock market is now all about the stock market, maybe don't listen to him. Everyone's a genius in the bull market. Everyone thinks that they're the best investor in the world when they're making money, but we're in a bull market right now, which means that stocks are going up. People are buying. No one is really selling right now. Talk to friends and family about this kind of thing, but do your own research. The third one is YouTube, and these videos are only available on YouTube, so I might be shooting myself in the foot here, but there are a lot of people on YouTube who will, again, really hype you up on certain stocks and be like, look, this is my portfolio. I've made millions. I'm retired at 25. Don't listen to them. It's really, really hard to not have FOMO, and I know because like I didn't buy any GameStop stock myself. Of course I have FOMO. I see people just pulling the trigger and buying tons of GameStop stock and getting hundreds of thousands of dollars. But I didn't buy any because I knew it was speculation. I knew it was going to come down eventually, and I didn't want to be caught bag holding. Bag holding is another term where you're holding onto a stock that's losing money that becomes a liability to you because it's taking money away from your overall value. So yeah, friends, parents, family, etc., YouTube, take what they say with a grain of salt. There are some good nuggets out there, some good little tidbits of information. I hope that my channel is one of them. Just be cautious. Use common sense. And the last one are financial gurus. So these are the guys who will try to sell you a book at every turn, and they're like, listen, I'm a billionaire investor and I've got this book and you should buy my book. Pay attention to how they made their money. I really wish I remembered his name. Might be a good thing that I didn't because I don't want to bash this guy too hard, but he is technically, I think on paper, a billionaire if you counted up all of his assets. And this guy's written a whole bunch of books. And then I looked into how he gained most of his net worth, and he gained it through classes like sort of like the multi-level marketing kind of scummy like oh yeah, like join my class, you'll get the first one free. Oh, you just pay for our class package and you get all of this, and this for like $750. Just give me the $750 and you'll be a millionaire just like me. This guy's like that, and a lot of other financial gurus are like that. You have to be very, very careful about who you listen to. Make sure that you're doing your research. If there's one thing that you take away from this, always research. If you have any doubt in your head at all, research. Just type stuff into Google. That's all it takes. Read the guy's Wikipedia page. See where he got his money. If he's declared bankruptcy 7 times and he's made all of his millions from a multi-level marketing scheme, don't take financial advice from a guy like that. Alright, so I think that was kind of it for what I wanted to cover for this video. I know that a lot of the stuff is common sense. It doesn't really feel like there's a heck of a lot of concrete content, but I just wanted to go over some definitions with you guys just to make sure that you know what I'm talking about in future videos. Next video, we are going to start to get a little bit in the nitty-gritty. I want to talk about timing, and I want to talk about like a potential crash. Is it really a good time to get into the stock market? What a crash means for you? Will a crash even happen? So stay tuned for that. Thanks again for watching. Thumbs up, subscribe, you guys know the drill, and we'll see you in the next one. Oh my god, look at this dog. I think her head, this is her paw.